What's up guys, and welcome to today's video. So today I thought I'd do something different, and what I'm going to do today is take you through my journey of investing through memes. So as somebody who's relatively new to investing, I thought I would just take you through 5 stages I've been through as an investor. So yeah, through the medium of memes. Who doesn't love a good meme? Anyway guys, let's get on with the video.
I'm not supposed to talk about this, but if you are, it's a very exciting time. We got a lot to do. We gotta get to it.
So guys, number 1 is excitement. And I think, when I first got into it was a really exciting time. I think the premise of the stock market is exciting because it gives you a mechanism to leverage capital that you have to make more money. And who doesn't like more money? Let's be obvious. But yeah, I think it was really exciting. So I think that initial period of buying your first share, buying your first ETF or whatever, it's actually quite an exciting experience and something that I was really kind of feeling at the start. And also I think I came into investing with the premise that I would do it as a hobby, not as a career or anything. I'm not that good anyway. But I mean, I was going to see it as an enjoyable experience, so as well as a learning experience, but also try and enjoy the process. I think that's also really important, is that you actually enjoy it. And I can definitely say I absolutely just love the whole mechanism, and I think I just really love it. So yeah, it's number 1. Enjoy it, excitement.
Baby, I'm looking at this script like it's the Da Vinci Code or some shit. I don't even know what is on this paper. I need somebody to give me some syllables or something. I don't know.
So guys, number 2 is confusion. So you've got yields, you've got stocks, you've got bonds, you've got options, you've got forex trading, you've got gold, you've got cryptocurrencies. You've got, business reports to read. There are so many, so much to basically learn, so many abbreviations of words in the stock market. You've got, understanding yields, being able to read business reports correctly. The second part of once you get over the initial excitement period is mass confusion of when you look at all the teleprompts and you look at all the green and the red and you're just like, what is that? What is this company? What does this mean? What does volume mean? What does open and close, lows and highs? Mass confusion. I remember the first couple of days after I bought my first share being like, what is going on? And I think I joined at the time when everything was going up, so everything was green. But I mean, at the end of the day, understanding the lingo and I guess the abbreviations on trading platforms, that was definitely a massive hurdle. So massive confusion right at the start. But yeah, I think I've definitely learned a lot by making these videos and also just being in the stock market.
He needs some milk.
So guys, number 3 is stocks don't only go up. And I mean, it's very obvious, but I think a learning kind of hurdle for an investor is the first time they buy a stock and it absolutely nosedives straight into the ground. And so my experience on this, and this was one of my first videos, was around the Boohoo Group, where I basically bought a load of shares. They were doing very well. I still think they're going to do well, but they completely nosedived as a share. And I think I went down 25% from the allegations around the supply chain, and also that it was being compounded by them apparently being linked to the second outbreak in Leicester. So basically, learning how to deal with that first initial nosedive. And I think it's one of those things where it really tests your kind of risk appetite. It certainly tested mine when I saw it absolutely plummet. I was like, do I get out or do I believe in the organisation going forward? But I think just, stocks don't always go up. They can sometimes come down. It even says it when you buy the shares. I think, a learning experience is understanding that it's never always going to go up. I mean, people who bought in at the right time during the recent, I guess, drop we had in March. That was a very good time because the entire market was like rallying and everything was great. But I think we're now leveling out and we are starting to see more kind of stocks, I guess, fluctuating at this rate. But yeah, definitely one of the learning experience is absolutely nosediving in the stock.
I'm actually a conservative, but I'm a common sense conservative. Look, nobody's more conservative than me.
So guys, number 4 is being conservative with your money. So when I first started investing, I was doing large sums of money into specific ETFs or companies I believed in long term to get an initial investment in. However, now I'm doing more of a monthly type of investment cycle. Actually being conservative and planning out how you're going to use your money is really important, because I think you want to try and have a plan of how you're going to invest it. It's not, oh, this stock is really good, or it's really cheap today, I might as well spend all my month's allocation on it. You might need to put yourself in a position where planning out how much money you can afford to invest, because there is the potential you could lose it each month, so you can build up that kind of investment plan. And I think for me it was learning to be really conservative with my investments. So go from the start of having basically lots of excess capital to invest to now, once all that initial investment is in the market, I'm now on more of a kind of a monthly, as when I get paid, basically I can then invest and drip feed that in, and I have to become basically more conservative with my investment. And I guess it gives me time to kind of breathe and think about it a bit more, because when you have the capital and it's ready to go, every deal that seems great. Whereas if you have to think about it a bit more, you're kind of a bit more cautious and conservative, which can sometimes help as well.
This is exactly what I've been waiting for. This is exactly, I don't mean to sound like Cat Williams, but this is exactly what I've been waiting for.
So guys, the last point number 5, is time. Essentially, time in the market is more important than timing the market. And I guess the investment journey I've been on and kind of what I've learned so far is really, it's very hard just to time a share of when to buy, when to not buy. And for me, I'd rather be in it for the gains and, suffer a bumpy road kind of up to those gains. If I believe long term in the stock, I'm prepared to buy at a higher price if I don't want to miss out on those gains. And there are loads of examples of where if you just say to yourself, oh, I'll buy it if it drops, $20, or I'll buy it if it reaches this certain level. It may never reach that level. And if you believe long term that this stock or share is going to flourish in the market, don't be afraid to invest and get in the market at a certain price. But yeah, time, just waiting. Investment is like a farmer. You are planting your seeds and you are waiting. So one of the things I've learned to do is wait. So guys, that's today's casual video done. It's exceptionally hot in the UK at the moment. I'm absolutely dying. But yeah, those are the 5 memes that kind of represent the journey I've been on so far. So we've got excitement, confusion, definite pitfalls that have fallen down. We've got kind of, going from, being more conservative as I guess my knowledge about the stock market goes up. And also about this time about being kind of more patient with my investments. But yeah, anyway, those are kind of the 5 memes and the 5 kind of phases I've been through. Comment down below if you have been through those yourself, or kind of what was your initial investment journey like. But anyway guys, hope you enjoyed the video and smash the like button if you did. Anyway guys, have an amazing day. I am going to get out of this room. It's exceptionally hot. Anyway guys, see you later.